You have
let's
to,
get, let's get started. I want to introduce myself and the rest of the folks here. I'm Beth Abels, co-coordinator of Sustainable Environment Institute, and also an architecture professor at Pierce College. And I want to welcome you all to our panel on fossil fuels and finance. So I'm going to hand it over to you, George.
well, thank you, Beth. Along with Beth, I'm the co-coordinator for the Sustainable Environment Institute. And we've gotten more ambitious this year. As you probably have seen, we have more of these seminars through Professional Development College. We're also, in a sense, branching out into material that for some of us is new, in that we tended to stay within sort of climate science and heat and drought and all of the sort of physical aspects of climate for the first year we did this series. And last year, we got involved in the issues involving mental health and young people, climate anxiety. And I see that Zhao Benhorf is logged in. She prepared, you can see it on our webpage, which is behind me. That's that website behind me, that Zhao prepared some pages at Valley College on dealing with youth and climate anxiety. So this is consistent with our efforts to branch out into aspects of climate that are not in a sort of STEM silo or in a sort of science-y approach. And divestment is one of them. I'm glad we have both Andrew Walzer and Cynthia Kaufman here today. We know Andrew from his work at City College, and because he's been arguing for and organizing around divesting the pension funds, CalSTRS and CalPERS, from their holdings in fossil fuel companies and their sort of related. It's not just oil, gas, and coal. It's also exploration and drilling, logistics, pipelines, the entire package of fossil fuels. So thanks to Andrew, it's been on our radar. And we've featured articles from Andrew in the past on in our newsletter, and not without some controversy. So that is something that we hope today we can explore, in a safe way, that this does indeed raise controversial issues, as any boycott or divestment or disinvestment or defunding campaign will do. It often you'll get pushback, of course, from without further, I'm going to just to mention, to reiterate, of course, that unfortunately for us, Lourdes Brent couldn't be here today, but she is the head of the Professional Development College, and she has created this series through the PDC for us, and it's been a really wonderful opportunity for us to reach out to faculty in the community. So now I'm going to move into my shared screen with hopefully, if the tech is okay, you're actually seeing the flyer for today's event.
Yes, we are.
And thanks to Beth, she does really good flyers. So this is our two participants today. Andrew Walzer is professor of humanities at LA City College, and he's also a trustee of Santa Monica College and a member of Fossil Free California. And it's thanks to Fossil Free California that we've really accumulated a lot of materials. And I will share with you in a little bit that we've actually posted a lot of these on our website. Cynthia Kaufman is a director of the Vasconcelos Institute for Democracy in Action at deAnza College, and is also teaches in an organizing training community organizer program. She's also written a lot of books, two of which I actually will touch on today because they, of course, overlap beautifully with what we're talking about. So that is the motto, leave it in the ground. And that little piece from The Guardian outlines the important details. This shows you what is actually public opinion in different countries regarding how important it is to shift away from fossil fuels. It doesn't specify which way, but you can see that South Africa, China, Brazil, India, all these countries have above 80%, including 85% of Saudi Arabia thinks that people should move away from fossil fuels. And so divest now, this is a bit of too much text for a PowerPoint slide, but you can see that there is, in fact, really good data to show that investments in fossil fuels are not a good idea. What Bill McKibben once called stranded assets. That is that you can be holding more in fossil fuel inventory than you can ever hope to bring to market. And that's, in fact, the message we're hoping the financial sector will begin to understand. Now, CalSTRS will say that they are engaging with fossil fuel companies because of their holdings, what you might call a shareholder initiative or a shareholder opinion. But we've heard this before. We heard this regarding South African apartheid, where the Reagan administration said, we're going to do constructive engagement. We're not going to do divestment. Fortunately, the divestment campaign won out over the idea that you could change South Africa from the inside by having influence over their decisions. CalPERS and CalSTRS have 42 billion in fossil fuel investments. This is thanks to fossil-free California. So this is not, these are significant pension funds. They're probably the largest pension funds in the US, if not the world, these two particular ones that are basically public employees in California. So there are efforts. The first effort was actually a failure, and that was because a rather corrupt Democrat in Sacramento basically killed the bill that would have instructed CalPERS and CalSTRS to divest. So that was, this is now the second effort. So there's a new bill, and it's in the Senate in Sacramento, and this one has a far better chance of passing than the previous one that was essentially scuttled. UC Berkeley, or the UC system, has already divested. They started in 2019. Apparently, they've now succeeded, and of course, now we have this new bill. There are, Pensions and Investments is an insider magazine, but they looked at this in a sort of neutral way in this article, and these are posted on our website. And so there is the new approach that will hopefully succeed where the previous bill didn't. That said, this is the CalSTRS pushback. I gleaned this from a one-page statement that CalSTRS made on what their concepts are, context of corporate governance principles, stewardship priorities. And you can see there in the print, basically, that the intention of the proposal was not aligned with CalSTRS corporate governance principles. Interesting. So they're pushing back in the sense that you can't go and legislate procedures in a pension fund that have to do with the sustainability of the fund, or what they would like to see as fiduciary responsibility to bring back the highest return. For those of us who have our pensions in CalSTRS and CalPERS, I have mine in both, we don't want to retire at the cost of the survival of the species or the planet. So that it's interesting that their corporate governance principles don't include that. But in fact, sadly, fossil fuel investments persist, despite some good news today on the increase of investments in renewables now outstripping, so according to Brookings Institution, investments in fossil fuels. I'm not sure about the data on that, but here you can see how the amount committed through the G20 countries of each country is really quite a bit. Bill McKibben has also been quite keen on bringing up the Willow Project in Alaska. And thanks to David Beaulieu, I don't know if he's in attendance today, but he put out email this morning encouraging people to contact the Biden administration to protest what seems to be a slow walk toward approving this project in Alaska that would have far-reaching climate damages and ecological damages in this region of Alaska. So what are we facing?
We have a problem: climate change, flooding, extreme weather phenomena, heat waves. Luckily, more and more people want to do something concrete to stop it. How? By joining the divestment movement. What's that? Have a look at this. There's one thing that drives climate change more than any other factor. That's the unchecked burning of fossil fuels, meaning coal, oil, and natural gas. In order to obtain those fossil fuels, companies need capital. They get it from investors like equity funds or banks. We want to stop the flow of money to fossil fuel companies and show that this business has no future in a world worth living in. And we have a powerful tool at our disposal: divestment. That means removing money from the fossil fuels sector. How does it work? Many countries, cities, universities, churches, insurance companies, and even private individuals invest in fossil fuels today, sometimes without even realizing it. They put their money in a fund or a bank that then invests it on their behalf. These investments are destroying the climate. The divestment movement wants to persuade investors to invest their money elsewhere, and it has good arguments to back it up. That's because investments in companies that trade in fossil fuels aren't just bad for the climate, they're bad for investors too. Why? It's simple. At the 2015 UN Climate Change Summit in Paris, all 195 countries agreed to limit the global temperature increase to less than 2 degrees. But that will only be possible if 60 to 80% of the fossil fuels found remain in the ground. Those resources will then become worthless, and the companies that own them will drastically lose value. The carbon resources bubble will burst. Investors will be threatened with massive losses of 40 to 60%. Cities, countries, banks, and pension funds will lose a great deal of their capital. Unless they divest now. Take money out of fossil energy companies and invest it in alternative energy. It's the safe bet, not just morally, but financially too. We have a problem.
Et voilà. So this shows you the funding from 2016 to 2020 from the four major banks that are US-based banks: Bank of America, Wells Fargo, Citibank, and JP Morgan Chase, which has the largest, $382 billion invested in fossil fuels. When you look at all the banks together, so this is, going into the whole banking, financing, and hedge funds and mutual funds, insurance funds, beyond pension funds. And this is, of course, the records. You can see there, the big four: B of A, Wells Fargo, Citi, and JP Morgan Chase. BlackRock is one of the largest hedge funds in the world, assets in the trillions. They made announcements a couple of years ago that they were going to phase out fossil fuels, and then they didn't. So there is a lot of greenwashing and maybe manipulation on the part of either the funds or the fossil fuel companies themselves to mislead the public into thinking that they actually have gotten the problem and that they're doing something about it. So this is how much BlackRock has in oil and gas and utilities, and how little they have in renewable. And so once again, the very big banks, and you can see the trends there that vary quite a bit, but a lot of that might have to do with declines in investments given the pandemic and the sort of recessionary situation we found ourselves in. And so this is from Norway. Norway's sovereign wealth fund is actually one of the biggest in the world, excuse me. And they apparently have instructed their directors of companies that they invest in to tackle the climate crisis or be sacked. On the negative side, of course, is the pushback. In some states like Texas, there's an attempt to even criminalize suggestions of divestment. In fact, in Texas, I think they've explicitly said that it's not in the interest of Texas that their pension funds or any other Texas-based funds be instructed to divest. This actually would affect big banks that do business in Texas. So this brings up the whole issue of what is, environmental and social and governance-based investment, which has now become a favorite whipping boy, as they say, for the Republican Party. But on the positive side, and I'm going to do some plugging here, Cynthia Kaufman has many books out, but I chose two from her website that I think are important because they are, in a sense, forward-looking and also very constructive in what can we do. The Sea is Rising and So Are We has an introduction from Bill McKibben that's just come out. It's really the Climate Justice Handbook, and soon to come out is Consumerism, Sustainability, and Happiness. So here, I think Cynthia is going to be able to elaborate on this, on how can we actually deal with the economic system that favors these kinds of investments? How can we redirect the priorities of our economic system to meet people's needs and at the same time redefine what we call happiness, what we call success? So this is what we don't want. And on that very dramatic slide, I'll stop the share. I want to make sure that I've made co-hosts here. So I'm making Cynthia co-host, and I'm making Andrew a co-host, and hopefully you are now co-hosts. I actually had sent you some rather lengthy some questions earlier that I don't know if you got those in an email, but let's just start with if I were to address one of those, it would be given the historical success of divestment campaigns, such as that which led to the fall of apartheid in South Africa, what challenges face an environmental campaign on investment that are unique to both the institutions that have these holdings and the corporations involved? And I know that's a weird question.
So
No, I can.
sorry, I'm going to interrupt for a second. Could we let Cynthia and Andrew introduce themselves?
Oh, yes, of course.
Thank
Sorry. My intros at the beginning were rather skimpy. Go ahead. Yes, please. Cynthia, Andrew, make sure you unmute yourself and let us know what you're up to.
I mean, I'll just say hi and to say that was a great introduction. And you said everything that I wanted to say about me. And as you said, I am very active in fossil fuel California and have been for about 5 years.
Please mute the people that are.
Voila.
Unfortunately, it's Andrew. He's in a really noisy spot. So
yeah, it's true. It's my fault. Mea culpa. I've taught at a high school this morning. I'm full gear, teaching, and I'm in an office, and there is some background noise. I apologize. I will mute when I'm not talking. So once again, I apologize. I've been active with the SEI Institute. I'm a former trustee at Santa Monica College. I'm responsible for getting a 10,000 person worm bin at Santa Monica College to eat compost. That's my claim to fame, and so I'm famous among the worms. And I'm here to talk about bank divestment. A lot of the climate justice movement has coalesced around putting pressure on the banks to divest. And I want to make this a quick point. Two quick points. One is that climate change is not good for investment. It undermines our economy. Climate change. So oftentimes the conversation is divestment's will hurt us economically, but climate change is going to hurt us economically too. My second point is, I forgot. Oh yes, I have my second point, which is that we have put a lot of pressure on the pension funds and banks to divest from coal, and that has been successful. And the coal industry in this country is collapsing. So we even have examples from the environmental movement to show that divestment is an effective strategy. That's what I have to say for now.
And then I think, because George mentioned my books, I think I just wanted to say one really huge picture statement, which is, I think so many of us are kind of struggling with climate grief and anxiety in a sense of when is the world going to do something? And, I saw a graph recently that shows US emissions look like this, they're really headed downwards. The EU emissions are really headed downwards. So the work people are doing is effective. And for me, the most important thing to say about kind of the big picture is that all of the technology to get us to 1.5 degrees Celsius to sort of completely decarbonize the world economies by 2050 are all there. They're all in almost every sector. They're actually financially viable, and so then what's keeping us from getting there? It's not having the know-how, the technology, the engineering. What's keeping us from getting there is the political power of the fossil fuel industry. Kind of almost like period, end of story. And agribusiness too, that's another kind of side thing. But so what the reason why we're focusing on the banks and on divestment is there's the top fossil fuel companies are doing everything they can to slow the transition. They are not themselves trying to transition. And so that's why it's really important to take away their social license, which takes away their political power, to stop them from stopping us from making the transition.
Well, Cynthia, that's a very interesting term, their social license. I know that you're, a very profound political thinker, but I'm wondering if you can expand on that idea of how would I don't know, citizen movement create a boundary or a limit or a ceiling for what is normal in capitalist enterprises, which is invest more, increase earnings, increase profits, satisfy your stockholders. Where do we find this social license? Is it that we basically accept that as a given and that there's nothing we can do about it?
Yeah. Let me give you let's just take ExxonMobil as an example, right? That ExxonMobil is one of the biggest, most powerful corporations in the world. We now know that their scientists knew that global warming was a serious problem, going back to like the 1980s. They've known that. Their scientists knew that, and yet they chose to say to the public, no, there isn't a problem, or the science isn't settled, for the next, decades and decades. And still to this day, they're saying, we plan to be net zero by 2050, and yet that's in terms of their like their offices and things like that. But in terms of the burning of their product, they don't count. This gets technical really quickly, and I'll try to avoid that. But there's a thing called Scope 3 emissions, which is the emissions that come from the burning of their product. When CalSTRS and CalPERS say their plan is to only be in companies that are net zero by 2050, that includes Exxon having a net zero 2050 commitment that does not include the use of their product. So talk about greenwashing. I mean, that is such a huge piece of greenwashing. So the idea is CalPERS and CalSTRS are still saying, well, but we got some new people on the board of ExxonMobil, and so maybe they're going to do something differently. So it's like still playing the game as if they are normal, responsible members of our community. So we're giving them social license by engaging with them and saying like, oh, let's talk, maybe we can make things better, and at a certain point with South Africa, we said, no, the apartheid regime is not going to, the tiger will not change its stripes, right? That is fundamentally who they are. And so that's what we're trying to say about the fossil fuel majors. Fundamentally, who they are companies that are profiting from our shared doom. And so we want to take away, we're not inviting them to the dinner party anymore. We need to stop inviting them to the dinner party and treating them like kind and normal people. They're not. And so that's that concept of a social license. And it actually comes from sort of business schools, that's one of the things a company needs to function as a social license, a sense that they're normal, responsible, moral members of our community. They're not.
Well, I want to just draw people's attention to the chat, because a lot of our participants are actually are contributing. David Bolio logged in and reminds us about the Willow Project. Beth has put up the phone number for the White House to call. And one person attending has also said we should also include labor unions. They have funds. And we talk about pension funds and all the others, but labor also has sizable funds. So I'm wondering, Andrew, if you would like to address this issue of that kind of overlap between, in a sense, confronting the pension funds policies, but also confronting the banks, because on March 21st, Bill McKibben has announced there's going to be I think it's on an international level, a confrontation with the banking industry on fossil fuel investments. Can either of you elaborate on March 21st, and how is it different from our critique of CalPERS and CalSTRS?
I'm going to let Cynthia start with that, because there's an announcement right now from a student over the speaker, and I can't talk.
All right. Okay. So yeah, just jump in, Andrew, when it's safe there. So so these are two. We've been working for many years to take away the social license of the fossil fuel industry by getting the two of the largest pension funds in the world to divest, right? And then Bill McKibben is sort of opening up a new front, which is to like, let's take away the social license of the fossil fuel industry by focusing on the banks that are enabling them. And I think it's a really smart strategy, sort of focusing on the four biggest, the four biggest fossil fuel funders as banks to, to sort of look, if you're playing with those guys, then you're also not invited to the dinner party, right? And so that somebody could maybe drop it in the chat, but it's really I love the way people are organizing these things now with respect to the 32123 March 21st, 2023 events. And so they're those kind of like prepackaged events, put a thing in the map, do it in your own little town, show up with signs at the bank, try to get press, and that's happening internationally. So I think they're both in real alignment with each other, but they're two different kind of sets of actions.
Yeah, that's the I'm realizing as I'm studying more and more of this, how complicated the financial sector is. No wonder greater minds than mine have spent lifetimes writing books about finance capital and the financial sector. But that's a good distinction. And I know that also Andrew makes that distinction that when you deal with the logic of a bank, for starters, they're not public banks. So we don't have the kind of leverage in decisions made in the boardroom at the Bank of America that we might with CalSTRS and CalPERS. So that does call for a sense of different strategy, and also maybe even, confronting the logic of the bank that they're in a sense free to invest in whatever brings a return. There is a question from Jeannie Lewis, though. It's sort of related to this. And she's, by the way, with the LAUSD Climate Reality Project, Climate Literacy Project. So I'm glad Jeannie's here. She asks, what we often hear is that our dependence on imported fossil fuels, particularly oil and gas, is bad for our economy, and it makes us internationally vulnerable, and it's not in our national security interest. And then you get the drill, baby, drill response of, to the extent that we use our own domestic fossil fuel resources, we're making ourselves more independent and therefore more resilient to weather the vicissitudes of the global market. And so how do we deal with that particular so-called imperative that we tap our own oil and gas in particular? I understand from what Andrew was saying that coal is actually being phased out even by market forces, not just by opposition to burning coal, but the market itself is not in love with the coal industry. But that said, how do we deal with this imperative that somehow we have to have our own fossil fuel reserves and exploit them to the max?
Do you want to take that one, Andrew, first? Is it quiet there?
It's quieter. The announcement over the loudspeaker has stopped. Let's see. I just think what the climate justice movement has a big coalition of groups that are focusing on organizing around March 21st to put pressure on banks to divest. And there is going to be a collective action to where everybody that's supporting this is going to actually together at one time move their money out of their Bank of America. I have my money in Bank of America, and so what they're going to do is collectively get folks to move their money out of these big banks and into credit unions, basically, which are local investments, locally controlled. So there are some good strategies out there, and also the climate justice movement has made progress with shareholders. A lot of progress in Europe, by the way, but also in the United States, we have made progress with shareholders of these institutions that support divestment.
And then to go back to the
go ahead.
Then the second part is the question about energy independence. I mean, in order for us to have a livable future, we've got to get off fossil fuels as quickly as possible. And I think it's important to know that renewables are coming in quickly enough that that's actually not a problem. I would encourage people. Mark Jacobson is he's an engineer at Stanford who has a new book that just came out. He's been publishing papers in this area for years, but he has a new book that came out called No Miracles Necessary. So, because sometimes people worry, is the grid ready for electrification? Are we ready for this? And I just want to say 2 points. One, yes, we are ready, right? In other words, that the technology is there, even for sort of, storage for when the wind's not blowing and the sun's not shining and all that kind of stuff. And then also to remember that our movement to stigmatize this fossil fuel industry so that they stop stopping legislation, because that's even in California, it's still happening, that the fossil fuel industry is politically powerful enough that they're slowing down the transition that we need to be making. And that's the core problem for why we're doing what we're doing. It's not gonna close off our gas tanks tomorrow, right? And there's this really funny thing that happens when you argue about divestment, that you'll hear the same people say, on the one hand, divestment is purely symbolic and has no impact. And on the other hand, they'll say, but we can't stop having gas tomorrow. And it's like, it can't be both that powerful and that not powerful. It's somewhere in the reasonable in between, where it's going to help speed the pace of the shift that we need to make. And so that's the answer, my answer to that question.
Also, I'm going to chime and say that Europe is being forced to shift to renewables as we speak because of the war in Ukraine and the cutting off of oil from Russia. And so they're going through a rapid transition right now out of necessity. And but it just shows that it can be done. And also, even in this country, the Inflation Reduction Act brings in a lot of subsidies for shifting to renewables, and it's going to play out in the next couple of years, and it's going to fuel a major transition. So it is happening. We can make it happen, and we just got to keep on pushing and speak out.
Well, on the chat, David has shared a couple of points that deserve sharing. One is something called Stop Oil Pipeline, and their target is actually the famous Chubb group of I guess, their insurance. So we do have to think in terms of all of these different institutions that there was, in fact, in Europe, a big decision regarding HBSC Bank. I think that's what it's called, in the last few months. And then we mentioned earlier in the intro the Norwegian Sovereign Wealth Fund. So
Yes.
I guess Europe is a little more ahead, or maybe quite a bit more ahead than we are. But as Andrew points out, a lot of it is the circumstances of having their fossil fuel source, in a sense, cut off with the situation in Ukraine. I wanted to touch on something you brought up a little while ago, because I'm glad to see that finally there's a lot of literature that's critical of this whole concept of net zero. And what I've learned from people in facilities, that net zero is something you can say about a building, but it's not something you can say about an economic sector. And that, the whole idea of buying, the offsets is the big thing, right? I bought 1,000 acres in the Amazon to offset all the carbon I'm spewing. So that, I think, is worth noting, that there's a lot of assurances about net zero and deadlines in years, 2030, 2050, and yet it depends in many cases on technologies that don't even exist yet. So that's, I think, your point, Cynthia, is the technologies that we need to get to where we need to go are already here. We don't need nuclear fusion. We don't need magic stuff from the sky. And that's, I think, a very good point when it comes to investing in renewables. We know that as far back as 2010, solar and wind met what we call grid parity, and that now they're better than grid parity. Right. So that a kilowatt from wind or solar is cheaper than a kilowatt from a coal-fired power plant.
Yeah, absolutely. I also wanted to say that there's so many targets. I know for myself, 5 years ago, I was like, okay, I really want to do as much as I possibly can for the climate. Where do I begin? And I didn't have necessarily a sense of where to begin. And now I want to say that there are targets everywhere. So sure, try to pressure Biden to stop, permitting the new infrastructure. And by the way, there, international climate organizations have made it really clear that there should be no new infrastructure. Right. And so even when we talk about the transition, like how quickly we close things down is a hard question, but it's really not a hard question. There should be no new infrastructure. So wherever you want to, I would say to everybody who's listening, find your flavor, find your place to dig in. If you want to get involved with the 32123 kind of bank pressure, do that. If you want to work on getting a union to take its money out of fossil fuels, do that. If you want to work on help us with CalPERS and CalSTRS, your district has a really important kind of role it can play with respect to CalPERS and CalSTRS. Help us with that. You want to jump on the bill? Help us with that. There's action to be taken really anywhere you want to go. And one of the things I love doing, so I'll just make this as an offer. If anybody says, I just want to talk it through with somebody, where's the best place to put my energy? Reach out to me and I'll help you find your flavor.
Well, thank you, Cynthia, because that's the kind of constructive thing we're hoping that this seminar offers people, is not just more knowledge, but more ways to participate, and particularly when those things that hit close to home. In my case, I did used to work for the state of California, so I have a little bit of retirement in CalPERS, and then now I'm an instructor. I have CalSTRS. So I'm looking at this bill that is the new bill that's in Sacramento, SB 252. That I guess repairs the problems of the previous bill. I don't know if you're tracking with it. I know it has some really good endorsements and a good author. And I'm wondering if there's any dark side to it. I saw one critique that said it actually doesn't go far enough, that it provides all kinds of wiggle room for the pension funds to delay and to evaluate and make a second assessment down the road. And is it deficient, or is it an important step forward? SB 252.
It's historic. So I just want to say that, so yes, it got watered down a little bit in terms of the timelines. There's a little wiggle room that says, if they decide that it's fiduciarily terrible, they should, they can have some wiggle room. But this is what we think we can pass. And I will say that having this bill pass will send shockwaves through the fossil fuel financing world and will be very frightening to the fossil fuel majors. And so, Andrew and I are both working really, really hard on this bill. And last year, as you said, I don't say it failed last year. Last year, we got first time, most of us were totally inexperienced with legislation. We got all the way through the Senate. And then, as you said, George, we got killed in the Assembly by a really terrible committee chair who wouldn't even let it be heard. He's out now. That committee now has a chair, Tina McKinner, who's from the LA area, who's really good. So we think we're going to get all the way through this year, and it's going to have historic implications. And I just saw in the chat, United Teachers of Los Angeles last year did, a long time ago, came up with a resolution saying they supported fossil fuel divestment. But anybody who works with UTLA, we could use, right now we're looking at just a little organizer moment. Right now we're looking for as many institutions to say that they support the bill as possible. It's really easy to there's a line on document, and you just reach out to me. If UTLA could say that they are in favor of the bill, that would be tremendous, because we're doing a lot of work to get California Teachers Association on board, and lots of locals have, but it's one of our big things we're working on.
Amen. I just want to say amen to that. It would be good if we could get UTLA to be more active. And I'm happy, I live down here, and so I'm happy to work with folks if on that project. So contact me as well. Walzer AH at lacitycollege.edu. And I'd love to form a group out of this conference to work with UTLA to speak out more. And they do have some say with CTA. They're a big part of CTA, and there's a couple big urban unions that could really push CTA to take a stand in support of divestment, and that's going to be crucial too. This divestment, it's going to happen. Sooner or later, it's going to happen, and we're hoping sooner.
Yeah, and your union is affiliated, right, with California. I always have to say it out loud to not get my letters wrong. California Federation of Teachers, and they did come out in favor last year, but they could also do more. And it'd be great to have your local also. And I know Andrew's working on that, right? To have your local also come out in favor of the bill.
Well, our union is AFT, American Federation of Teachers, but from what one of our members here is Jill Bellenhorf, and she's actually also on the AFT board. She's elected there, and she's letting us know that there's some tension between what AFT is supporting as far as divestment goes. I thought it was called CTA, but it's the bigger one that we're all in. So we pay into it, and quite a bit of money. And Zhao was telling us how much the AFT pays into this statewide teachers association, but that they've been foot dragging on this. I don't know. I haven't been able to follow up to see if there is some tension between these two major labor groups. But the amount of money that AFT puts into it is quite a bit. So
it's
I don't know.
CFT, California Federation of Teachers. Cynthia had it wrong. Is our statewide chapter is the of AFT. So we have a local, then we have a statewide CFT, and then there's the national, which is AFT. CFT could do more, needs to do more. There's plenty of people in leadership that support this, but they haven't taken a strong stand in terms of mobilizing their lobbyists in favor of this bill. So we need to work with CFT to take a stronger stand. It would be great. Folks in this room on this line.
Yeah. I also, on a different story, I wanted to answer David's thing about the length of the timelines in the bill. We did have a shorter timeline, and last year it got amended to be a longer timeline. But what I want to say, David, is that I feel like it's not about the money as much as it's about the social license, which means the minute that CalPERS and CalSTRS commit to divestment, we have sent a shockwave through the system that's really powerful. And so when they actually sell their stocks, in my opinion, it doesn't matter nearly as much. And so that's why when they asked for an amendment to kind of slow down the timeline, we didn't resist it.
Mm-hmm. Mm-hmm.
That's a good question. So yeah, I hope you all reach out to Andrew and get organizing on this, because really your district is in a position to pull all kinds of really important levers on this.
Well, I see that Jeannie's offering, we do meet every 2 weeks, the Climate Reality Project Curriculum Committee for LAUSD. It's a wonderful group of people led by Lucy Garcia, who would probably be here today, except I think she had to have a eye surgery or something. So we didn't have our meeting on Saturday where I wanted to promote this event, but it looks like we have a lot of participation from that group.
Right.
So that's another point of pressure, if you will. It would be nice if the Board of Education, for instance, were to get on board with endorsing SB 252. And yeah,
George, I want to mention one thing, which is that we have a representative, our union, and the California Community College unions do have a representative that sits on the CalSTRS board, Sharon Hendricks, and I know she was supposed to be here today, and it would have a vigorous debate would have ensued. And you know, we really need to be speaking with her one-on-one and collectively about speaking out more vocally in favor of divestment. She does say she supports divestment, but she hasn't been vocal on the CalSTRS board on divestment. So we need to continue to encourage her to speak out and take a stronger stand, and to help CalSTRS tone down their rhetoric, their exaggerated rhetoric against, they lobby against this divestment bill, and they make a lot of exaggerations. And we've been asking her to ask the staff to tone that down a little bit, because it's really outrageous lies. But we need to work with her, you know, every individual in this room, to get her to take a stronger stand and speak out more on this issue.
Yeah,
Can I just elaborate on what Andrew just said? Because something actually, Andrew, it's sort of breaking news that you've probably been too busy this morning to get it, but we, CalSTRS just came up with its 8-page analysis of SB 252, and it contains, it's extremely one-sided. It has all kinds of exaggerations it's not very good, let's just say that. And the board will be voting on March 1st on whether or not to adopt that statement. And so anything that can be said to encourage Sharon Hendricks to speak out, to say we need a less biased, a more kind of factual statement from the staff about the bill. And we have a whole analysis of the lies they put out last year. And with the bill, the new analysis just came out, and we're going to spend the next couple of days kind of digging into it.
Mm-hmm. Well, if I could channel Sharon Hendricks, because I've had conversations with her, I anticipate the two things she might say that are definitely worth engaging with. One is that there are other states and other localities that have attempted actually where divestment is underway, and that we would need to study, for example, New York, maybe I think even New Jersey, other, maybe other educational institutions, to see how it went or how it's going, and to learn from them what mistakes not to make. And so that we wouldn't repeat errors that have been made in other divestment projects. I actually don't know enough about what's happened in New York, or what I do read is all very positive. It beginning with the very first liberal arts college that began divestment way back, and it's just been growing and growing and growing. Harvard, UC, all of them now. So I think there's a lot of traction as far as how it's done. But the other thing she'd mentioned, which might be interesting, is that she mentioned to Zhao, our colleague here, Zhao Bohnhoff, that she's one of the progressives on the CalSTRS, and that that Governor Gavin Newsom has made some appointments of people who are right out of Wall Street. In other words, they're financial experts, fiduciary experts, and that now the board is heavily weighted with these kinds of people. I think Xiao did some research to find out if those appointments went through or who they are, and we don't have any updates on that. But that is what she would say is, without me, you'd be in the mouth of the wolf.
Yeah, can I? There's so much I want to say about it. Can I? So there are 3 CalSTRS board members who have publicly talked about divestment. So Fiona Ma, Tony Thurmond, and Malia Cohen have all at one time or another said that they favor divestment. If you add Sharon Hendricks and Harry Keeley to that, who's another local person, that's 5. That's 5. There's only 11, right? And then there's a couple of wishy-washies in there. So if anybody were to have the courage to speak publicly in favor of divestment at that board, something would happen. We think, and that's one thing I would want to say. The other thing is that Makita and BlackRock, who are 2 big like financial services, companies, have done analyses of past fossil fuel divestments, and nobody has lost money on fossil fuel divestment. Nobody. So that curiosity has now been settled. And there's a funny thing happening now with the war in Ukraine, and that there was a tremendous amount of profiteering that happened in the last year. So the stocks are higher right now, but the long-term trajectory is downward. So this is a perfect time to sell your fossil fuel stocks.
Mm-hmm. Denise Robb has her hand raised. She's at Pierce College. Go ahead, Denise.
Oh, hi. Thank you for this important meeting. I just wanted to mention, I live in Pasadena and belong to a group called the Pasadena 100. And we were pushing for a 0 carbon by 2030. And the city council was opposed to it. We couldn't really get much traction, little by little, through a postcard campaign. And then just a few weeks ago, we packed the city council room in person, and a lot of high school students from locally. It ended up on the consent calendar, and they pulled it off the consent calendar. And I thought, oh no, this is where they're going to end it. And they only pulled it off the consent calendar because they said, maybe we can do it faster than 2030. And wow. They went from being, some of them on the fence, because we thought we only had 2 votes, to a unanimous. I'm gonna cry when I say it, because I didn't expect it. It was unanimous, and we can do that with a CalSTRS board. It's just organizing. It's not even super complicated organizing. We get a postcard campaign going, and then we show up at the meeting with hundreds and hundreds of people, and everyone. I don't know. I don't actually know how CalSTRS works. Are you allowed to speak at CalSTRS? Do they have like a?
They do. They do.
Okay, then everyone takes a card to speak, which means they're going to be there till 2 a.m, which they don't want to be. But then they get the message, and even the Wall Street people, they're all going to die from severe climate change too. They're not going to have any investments left. It's such a no-brainer. We just. We organize, and we're pretty good at that. Our union is good at that too, if we get the union to join.
Yeah, can I say, first off, congratulations, that's huge what you just said. And the other thing, one of the things that's super frustrating around organizing around CalSTRS is that they typically allow 20 minutes of public comment. We usually fill it, but that's all they give us. If more people show up, they get you down to shorter periods of time and cut it off. And on right now, if you look at their agenda for the March 1st board meeting, where they're going to decide whether or not to support the bill and whether or not to accept that statement that's full of misrepresentations, public comment is after they vote.
Oh boy, they really don't want.
We've been organizing, that's why we've decided that we need a bill to make them divest, because the level of respect for the public. I mean, we now have, I believe, a majority of unions that represent CalSTRS, a majority of membership, if you put the locals all together, have asked them to divest, and nothing has happened. And so we're decided that we have to go around them and do this bill.
Can you give me the number of the bill?
Yeah, SB 252.
252, thank you.
Yeah.
Well, you know, one of the things I've noticed in trying to understand all this, and for the last 20 years, my understanding of finance capital gets blurrier because it gets more and more complex. During the 2008 crisis, for instance, it was pointed out that Wall Street had invented so many instruments of investment that even the experts at the Securities Exchange Commission didn't actually understand how these instruments worked. These sort of bundled derivatives, and you know, where inside of these instruments there are indeed fossil fuel investments. So I'm wondering what advice you have to people like me who if I was any better at finance, I'd be better off. How can we get like a primer or enough of an understanding of how that system works, particularly Wall Street, in order to not be, dare I say, buffaloed by the experts on panels that are saying, don't worry your pretty little head, you don't understand fiduciary responsibility.
You know, this is so look, I have a PhD in philosophy, okay? I'm very highly educated, but I do not have a background in economics or in finance. And what I would say is that there's a way that people will bamboozle you with BS and start to like, wow, tracking errors and say all this stuff. It's not that complicated. It's not rocket science. I'm going to put it, so for the bill, we have a frequently asked questions document that kind of rebuts and responds to, you know, all of the things that are said. So you don't need a degree in finance to understand this. It's actually fairly simple. And so that's what I would say. If you read our frequently asked questions document on the Fossil Free California webpage, you're going to have everything you need. Because it's a way to disempower people, right? Is to say, don't worry your pretty little head, and this is really too complicated for you. It's not
complicated for you.
I agree with that. I think that it's important to, as political organizers, to keep the big picture in mind, to keep our eyes on the prize and not get too much in the weeds. We don't need to be experts in finance. We need to be experts in, you know, saving the future and having the big view of things, and understanding that climate change does not help our financial investments.
Well, one of the
and I'll
things,
say too, that's one of the arguments that sometimes people make against us too, is that we should leave this to the experts. And surely the experts at CalSTRS, their finance people, know better than we do. And I found that a really powerful and hard argument until I did sort of, so then why did they stay in coal? They got out of coal because we forced them to get out of coal. And that was really saved them billions. And what I want to say is that you have to do almost like a cultural analysis. You're all faculty here. So it's sort of like, and when I first got into this, I thought, why are they still in fossil fuels when it's a sector in long-term decline? And then they'll say, oh, it introduces a tracking error. A tracking error means you're not invested equally in every sector of the economy. That's not an error if you get out of a dying sector, right? Like, and so then I had to say, like, so why are they doing this? Are they sold out? Do they, what I finally decided is that you have to do a cultural analysis about who hangs out with who, the dinner party, right? So these folk on the board hang out with people in the world of finance, who hang out with people in the world of the fossil fuel companies, and nobody wants to be rude, right? Nobody wants to be rude to their friends. And so it's about who are your friends and who are not your friends, because honestly, the board members who represent the public are not getting rich off of this, but they are making really poor choices for the fund in terms of finances, and poor choices in terms of our future. But they're making those poor choices because nobody wants to be the sort of one who's rude at a cocktail party.
Good point.
Agreed. Agreed.
Yeah.
A lot of my conversation with Sharon is, you know, she emphasizes we've got to build consensus. We've got to build consensus. You know, I'm only one of, I don't want to be isolated. I'm only one of 8. And it's that same kind of thing. It's like, you want to fit in. And I, as a former trustee, I understand that narrative, but I don't, and I've fallen into it myself, and I don't agree with it. And, you know, I don't think you have to fit in. and be part of the
Be
consensus.
part of the game. Yeah.
And so it's just like, could you just at least ask that the analysis be based on fact and not misrepresentations? A small ask. It's a small ask for March 1st.
Mhm. Well, I have a question, sort of a legal one. I know nobody here is a lawyer, but I've always been curious about this because of the pushback, which I touched on in the intro, that there are bills in different states to essentially criminalize even a suggestion of divestment. And now you have the Republican Party referring to corporate wokeism to the extent that companies are trying to implement, goals of either sustainability or social justice or whatever they're trying allegedly to implement. Is there a constitutional basis for stopping this? Where do conservatives get the right to tell people that they can't say something or advocate for something, or that people that run a corporation can't implement policies that address longstanding, say, structural inequality in the business world? I'm just, I know it's a weird question, but where do they get this standing to attack what is something that they, well, I guess they're trying to control it, but it shouldn't really be in their control.
Right, but look, where do they get their standing to say you can't teach about race in high school, right? Like, where do they get their standing for any of that? It's about power. I mean, right, the law is, flexible towards, I'm not a lawyer, but I am a political philosopher, and I do understand that, law follows power, and so they get it from having a majority of people who believe in nonsense.
I'm just going to check the chat and see if there's any pending questions there. There was the question that Jeannie was asking if written comments could be submitted, but I think Cynthia answered that they do not allow direct communication.
No. So I put in, if you go to board@calstrs.org, I think I have the address right. I'll check and make sure I have it right. That will be sent to the person who manages the board, and they will send it to the board members. So when I want to I'm not allowed to directly communicate with board members, but I have to take it on trust. I hope it's true that our messages get through to the board members through that email address. So you can, and they do take written comments ahead of time.
Okay, good to know. That's sometimes even more effective than.
And somebody said in the chat, can you send the request for a more balanced statement? So I have a little thing that I wrote that kind of has links to a bunch of facts that asks for a more balanced statement. And I don't know who I could send that to, that it would then go to whomever is interested in this.
So
and we're about.
If you email it to SEI, we can put it into our website, but also we can disseminate it to anybody who is coming to the meeting today.
Great. So I'll email the statement that I did sort of based on what they said last year to Beth. And then in the next couple days, we're going to have our analysis of the document that came out today. We'll have that. So I'll send that to Beth, and then Beth can disseminate.
Yeah, and also I did see David had a question about the timeline for this bill, if it was longer than to 2035 for divestment, or what that timeline might be. Does anybody know?
I'm pretty sure it got amended to 35. I think that's right. I have a terrible memory for numbers. But in any case, what I had said before, which is that yes, the timeline is much longer than I think it should be and that I would want, but that we get most of our success from voting to ask them to divest. That's much more important than when they actually sell the stock.
Excellent people, guys. Paul Krugman. Oh, this is David suggesting Kuttner, Krugman, Climate Capital Weekly, and of course McKibben, who has a regular column in the New Yorker. So those are all good sources, and that then we can actually quote them.
Can we see if there's questions from our community? If anybody wants to unmute to ask a question, if you raise your hand, I'll see you and I can invite you to unmute.
Also, I wanted to mention that on March 21st is a National Day of Action. And right now in Los Angeles, we only have 2 actions planned, one in Beverly Hills and one in like Calabasas. It would be nice if we could organize something for either downtown LA or central mid-city or something more in the center of LA. So if folks are interested in, you know, organizing as part of this protest, please let me know. You know, we got to continue to raise our voice publicly.
Okay, Eugenia, you had a question?
Yeah, I'm just, and maybe this statement that you're going to share with us will help, but I'm just interested in the counter arguments to the prevailing arguments that seem to flood our, waves of, needing fossil fuels. We're not quite ready yet. And I know you address that we think we are ready. That has been sort of an open question in my mind as to, is the grid ready? Are we ready with renewable energy? Can we kill fossil fuels and still be ready right away? Or is that still a work in progress? And then the second thing is the counter argument to the teachers. Is there any chance that I'm a former teacher or counselor, but I'm in CalSTRS. Is there any argument that we might be scared that our pension would be affected, that we need to counter an argument with teachers about that?
Yeah, absolutely. I think there's a couple of arguments. One of them is, remember, we're in defined benefit, right? So the little ups and downs, that CalSTRS and CalPERS are defined benefit plans. That's one thing. The other one to say too is that I mentioned before that both Makita and BlackRock, or 2 kind of financial services organizations, did deep dives into the fiscal impacts and the likely fiscal impacts of divestment, and they showed that really that fossil fuel divestment is not likely to have a negative impact on returns, and in fact it is likely to have a positive impact on returns. And again, if you go to the Fossil Free California, our frequently asked questions document, we've got kind of responses to all of these arguments, and we've got responses to that one. So we've got kind of like, to point you to those studies that are really long and boring. You're not going to want to read them, but we've got it kind of summarized, what that is. So the fossil fuel sector is a sector in long-term decline, right? It had a little blip in the last year. Oh, and one thing I'll mention too is, so we actually commissioned a study from the Corporate Knights that was kind of before COVID that showed and again, I don't remember numbers, but it showed the many billions that CalPERS and CalSTRS would have been better off if they had divested before that period when we did the study in 2019. Then everybody's been saying, well, yeah, but the war in Ukraine and the profiteering and the numbers are up. So the Colorado pension fund just did a study that they just published. The activists in Colorado commissioned the same group of analysts to study even up to this year. If Colorado had divested, so like from this year going back 10 years, if they had divested, they still would have done better. And that's with a year of very strong fossil fuel profits, because this last year has been a good year for the industry, even so. And so I think what you want to say is, like, if you look at the graph, it's like this, the profitability of fossil fuels, and then it went up, and then it's going to go back down again as soon as the war in Ukraine is over. So that's what I want to say is that I believe really strongly that it will not have negative financial implications. And also remember, it's only a small sector actually of the whole fund.
Hi. David has his hand up. Go ahead, David.
Hi, can you hear me, George?
Yes.
Yep. Thank you very much to both of you. Really just a wonderful discussion. I would just add, for those who have doubts about the financial legitimacy of divesting, they should follow the UC guidance. When the UC divested 2 years ago, and we wrote about this in our publication, their argument, if you go to those financial people, their argument was they did it for strictly fiduciary reasons. They said this was not a moral decision. This was not a political decision. We're doing it because in our considered financial perspective, fiduciary perspective, it is best for the UC system to get out sooner rather than later. So, I mean,
Yeah.
these are the guys, Cynthia, that would offer you just perfect support for what you're saying.
Yeah.
If anyone doubts. The other thing I would just add is that, the example of Europe is so stirring, because everyone said Europe would have a terrible winter right now. Europe could not possibly cope without Russian gas. They could manage without coal and oil, but certainly not without gas. And they're going to be pretty well free of Russian everything by the end of this year. It's really it's a stirring case of what you can do with a will, with a sufficient will.
Absolutely.
Yeah.
Thank you. Great points.
Go ahead,
I want to
Andrew. You
point
don't
out-
need your hand up.
Oh, okay. I want to point out that there was an article on the sort of CalSTRS pension fund profitability in the LA Times in like November that you can Google it. And staff at CalSTRS was quoted as saying, we recognize that climate change is going to impact our fund negatively. And yet, they speak out both sides of their mouth. So they're contradictory. And I agree with staff that climate change is not good for the financial health of our pension funds. Vast parts of our agricultural sector are going to be lying fallow due to drought and et cetera, and, increased instability due to big storms like the one we're experiencing now. So that's a response, I think, to this argument that divestment undermines the financial health of our pension funds too.
Yeah.
Climate change, it does a worse job, has worse impact.
Well, a little closer to home, meaning California, we actually have quite a big fossil fuel sector in the state, which includes, offshore oil and gas platforms, and of course, hydraulic fracturing for both petroleum and natural gas, and a lot of controversies around that when Governor Jerry Brown was in office, that the state allowed the industry to actually pump or inject what's called product water, which is the water that's used in hydraulic fracturing. So it's very toxic, to basically pump it back into an aquifer. I was shocked that, of all people, Jerry Brown would think that was not a bad idea. What is up with California? Are we just talking out of both sides of our mouths and enjoying the benefits of fossil fuels while talking a storm about how bad they are?
Okay, so yeah. California is such an interesting place, right? Because we have some of the best climate legislation in the world, and we're also a petro state. So both things are true. Chevron is based here. So let me just give you one example that the environmental justice community worked really hard last year to pass a bill 1137, not to be confused with 1173, which was our bill. 1137 basically says you can't drill near homes and schools. Doesn't that, and we're at Los Angeles, I love it. Like in Los Angeles, there's all these like, what is that weird little piece of art building in the middle of the city? Oh, that's an oil derrick with a cute little piece of cement around it. So you don't know that that's what's happening right in the middle of Los Angeles. Okay.
Beverly Hills High School has an oil
Yeah, right. So a bill was passed to say, and over tremendous active opposition from legislators who are in the pocket of the fossil fuel industry. So we're still fighting it out in California. And then the fossil fuel industry paid people $30 a signature to lie to people to get something on the ballot to overturn 1137. So next fall, I believe, we're going to see a bill or like a ballot initiative to overturn that really important piece of legislation. So the point is, in California, we are still just duking it out,
Yeah. But
Both
David,
things
go
are
ahead. Go ahead, David.
I was just going to say, George, to your question about Brown, he said it very early in interviews toward the end of his career. He just didn't want the oil industry. Brown was always calculating, and he just said it was one hill too many. He acknowledged it straight out. He knew that there are an awful lot of people in Sacramento in the pocket of oil, the so-called moderate or business-friendly Democrats, and he just couldn't prevail on that. I think he could have shown more courage on it for a guy who likes to lecture a lot. But he admitted that. George, I just want to add one thing, and maybe Cynthia or Andrew, you could correct me on this, but I think we probably don't appreciate just how momentous it would be for CalPERS and CalSTRS to divest. Because Bill McGibbon will talk about 1,000 institutions that have divested. But when you look at it, what they have invested in fossil fuels is really, in some cases, just a pittance. It's 5% of their endowment, but their endowment is quite small to begin with. LACCD divested a while ago. Well, I don't know, had something like $100 in fossil fuel. I mean, it was nothing. It was nothing. It was just a symbol. It was just a gesture. But CalPERS and CalSTRS and that New York pension, if I'm a little unclear here, but the New York State employee pension, those are the big three in size, the biggest three in the world, I believe. So, and the New York Pension Fund hasn't divested. It's New York City that divested and another group. But my understanding is that, as Cynthia is suggesting, it would be an enormous step for CalSTRS and CalPERS.
Yeah, and that's why, some of us feel like we've been sort of banging our heads against a rock for our group has existed for 10 years, and I've been doing it for, I think, like 7. But, we've been banging our heads against a rock, because if we actually get through that rock, it's going to be huge. And so I really agree with you, David, that it's sort of like a market signal, right? Like it signals the beginning of the end of the profitability and the sort of like the reasonableness of investing in this dying sector. So it's going to be that kind of like to kind of push it over the edge in terms of its being, a acceptable member of the community that's making decisions about our future. It'll be huge, and we're maybe going to get it this year. So it's exciting, and great to jump on a campaign when you're about to win too.
Well, in the time we have remaining, I have a question that's probably maybe a little off of but it actually addresses your publications, Cynthia, and also your teaching, Andrew, because Andrew teaches in the humanities. So, both of you deal with sort of the social and even, non-economic, non-sciencey aspects of society. And I'm wondering how to address the fact that we are, in different degrees, sort of bought into a system that is suicidal. How do we move people, either at an individual level or in groups, to question the comfort that we've derived from living in a fossil fuel consumeristic society where the end all and be all is, I just got a Tesla?
Yeah. Okay. So sorry, Andrew, I have to take that because that's what my new book is about. So my book that's coming out this spring is Consumerism, Sustainability, and Happiness. And I'll just say that I was very interested, like you said earlier, George, the kind of the question of given how driven people are to have a new Tesla and a giant house and the best, and like, how do we get to sustainability? I mean, I think, and so I spent a couple of years just reading everything I could about that question, and that's what my books are. And then I put it all together, and that's my book, right? So, I'll say there's a couple things to say, but one of them is that you're right now globally in the middle of a huge transition, right? From a society driven by greed, deregulation, do whatever you want if it's profitable, to like, we can't survive as a species without seriously regulating those that are profiting from our destruction, which means we're already in the middle of a transition to a different kind of world. And so that's what I want to say is like all the fight that we do to take away the power of the fossil fuel industry is also really helpful to get to that better, more sustainable world. And, one of the really interesting things about consumerism, we all know, right, that it doesn't make you happy. It just makes you want more. It's like an addictive drug. And so we just need to build out those parts of the world that give us happiness because we have great community with people who care about the things that we care about. That's how you have a path to happiness. Okay, I'm a philosopher, sorry. So that's what we need to do more of. And anything you can do to decrease inequality decreases people's status anxiety. Anyway, I could go on for hours, but I'm not gonna.
I want to chime in. I'm a cultural studies person, and I would just propose that we need to create cultural narratives, stories like Cynthia's doing in all sorts of different realms in popular culture and film and media, through our education system. This is what SEI is up to. This is what the Institute is up to, creating alternative narratives or stories about how living sustainably is possible. And so the people on this Zoom call are engaged in that. And we just need to find a variety of ways, different ways of doing that, telling these stories of what is possible. Film, television, media, education, social media.
Well, speaking of that, I have before we leave, I do want to share our website to show you where we post a lot of this material. But I've noticed in recent times that there's some really popular Netflix shows and HBO shows that are quite dystopic. Like I think it's called The Last of Us is one that's really popular right now, and it's a dystopia. Even Severance, which was sort of surrealistically cool, was also incredibly dystopian. So when you refer to films and images and a lot of the cultural artifacts that are out there right now are in fact dystopian. They're saying it's the end of the world. Right? So we're also up against these, and they're very compelling narratives. They aren't, it's hard to put them down. So what do we do about that?
We put out utopian narratives. So check out the Story of Stuff project. So the Story of Stuff puts out these beautiful little videos that for any of you who are teachers, they're like 10 minutes that explain, so they have the basic first one was kind of like about like garbage and waste, but then they have a beautiful one that's called Solutions. That's just like 10 minutes that gives you a story of like how to get from dystopia to utopia. So yeah, we need more utopian fiction. We really do. We really do. And also sort of images of the good life, right? And again, I can go on and on about this, but that's one of the things that my work is about is like, no, we can imagine a sustainable society. The Zapatistas, that was one of, their slogans was like, another world is possible. We have to explain that and believe that.
Well, in the time remaining, I just want to share with you our website. This is the what's behind me, SEI LACCD.net. And this page happens to be under teaching resources. And it has today in here. I've put some really large documents in here that are very detailed studies, and hopefully they're up to date. And it should help anybody who wants to do a deeper dive into there's even CalSTR's rebuttal, but for the most part, these are advocacy pieces. And it does go back in time to just about all of the everything that we've actually featured on our site for some time. The other one I wanted to share is our newsletter. So we did feature today's event, but we do have a short piece here. We hope to have more after today. Andrew is a big contributor, as is David Beaulieu. Black History Month, we're featuring a lot of the contributions made by African Americans on environmental issues, including Robert Bullard, and this is useful for professors teaching environmental studies right now. And this is our work with the LAUSD. So that is our website, and our newsletter, and the newsletters are actually also hosted on the website. I see that there is John Morales has his hand up, so let's see what we can fit in our last few minutes here.
Oh, no, I just want to say thank you all. I don't know if I'm going to cut out yet, but thank you very much for everything. Very informative.
Oh, Charlie's asking the URL for the website. It's right, it's right there. I always have it behind me so that people will always find us. But I'm always trying to direct traffic to it, and we do try to keep it up to date. It has articles, teaching resources, and you can always contribute to our website if you have materials that you think are useful for faculty to use in instruction. By all means, share them, and you can see when you visit that we organize them by large topics, et cetera, et cetera. Let me see if there's anything. I know David's battery died, so he had to log off. We lost maybe a few people, but as it's now approaching our 90 minutes, I'd just like to leave it open for either of you, Andrew or Cynthia, to give us a parting inspirational. Tell us about what we're going to do in the next year.
I'll just say that really, I would just encourage everybody who's on this call to find your place and do your climate work. It's a all deck survival of the human species moment, and there's tons to do, and there's lots of places to get involved. So I hope you get involved with our bill, and I hope you get involved with getting institutions to sign onto the bill. But whatever you do, we're now past the time for sort of personal individual actions. It's really the time to get involved in institutional change.
And I wanted to say, I really appreciate this community, the SEI community. These folks are great leaders, George and Beth and David and all of you in this room. And I just want to encourage, I just have gratitude towards you folks and want to encourage us to work more together. And I'm just full of gratitude and appreciation for everything we've all done and this whole program. Yes.
Well, we're glad to do this, and we're happy to actually take on subjects that we haven't taken on in the past. We will have a list of topics for what's happening in March. April is Earth Month, so we have a lot more promised in April after spring break. So after the 9th, we'll have a lot of activities through the SEI and through our campuses. And we'll explain more of that later. But maybe in March, we'll have one on the topic I've always wanted to cover is agriculture and food, because that's what I studied at UC Berkeley. But I think that it's actually very climate related, and a lot of the assumptions we make about global food sourcing and food supply and so on are really not very good assumptions. So that I'm hoping to visit in a future seminar. I really want to thank you, Cynthia and Andrew, for making this a success today, for your contributions to what you're doing and what you've expressed politically today, as well as your insights into how we can, yes, we can confront the financial sector and not be befuddled by its complexity. So with that, thank you also Beth and Zhao for helping create this today. And I'll now end the recording, and it'll be available on the website. I think there's even an italics thing that'll be the YouTube or the cloud version of this.